Hey folks, Dan Frio here with your Mortgage Minute, where we're going to talk about what's going on in the economy and what's going on with real estate, because I want to make sure you're an informed consumer, especially in real estate, especially when it comes to the financing options. So yesterday we saw a complete crash in the stock market and mortgage rates spiked to the biggest one-day move ever. Well, what really happened? We had some CPI numbers, some inflation numbers that came out on Friday. Weren't that bad. Then we had over the weekend, Federal Chairman Powell, who's the grand poobah of the Federal Reserve, came out and said, yeah, we're going to continue with those 50 basis point rate hikes. The Federal Reserve their thought was to increase, or our thoughts were, to increase the federal funds rate by 0.5%. But all of a sudden, the markets just crashed yesterday. So did somebody leak some information that you and I didn't get? Why do I ask? Well, check out this news report right now from Steve Leisman, who might have some insight.
All right, welcome back. We've got a news alert on the Federal Reserve. Steve Leisman joining us down the fast line with more. Steve.
Brian, thanks very much. I just want to say my reporting at this point is that a 75 basis point rate hike to be announced at the second day of the meeting this week on Wednesday is very likely, a real distinct possibility. I think things have changed for the Federal Reserve, the CPI coming in hotter than expected, University of Michigan inflation expectations, consumer expectations in the New York Fed. I know that Powell said that the committee back in May was not actively considering it, but he also said that they were looking at the economy, and I think the economy has changed to the point, and my reporting is such that at this point, I'd be dialing in a 75 if I were a betting man at this point, not a 50.
Okay, so where did all that come from? Because just Friday and over the weekend, Federal Chairman Powell said, we're going to raise rates 50 basis points and then reevaluate. Well, let's get to the headlines. And this was what completely shocked the system yesterday. We had where Fed's likely to boost interest rates by 0.75% now. Well, that came out of the blue. So how's that affecting mortgage rates for today? Well, the only news we had out today was the PPI, which is a producer price index, how much producers' costs have gone up. But let's see what's going on with mortgage rates. Well, the thing we want to follow, because the markets haven't really opened yet and banks haven't put out their rate sheets yet, is what's going on with the bond that basically creates your mortgage rate. Well, you can just see we were up 13, now we're down 13. So it's a complete seesaw event going on here. So let me put this in the context how this MBS thing works. It's a mortgage-backed security. It's a bond that trades on Wall Street. That's yield is the biggest piece of your mortgage rate. Okay, so as those yields go up, your mortgage rate goes up. So how does it really work, or how do I dissect this? So let's look at the number behind me. You can see the price of this bond is down 0.13. That's irrelevant at this point, but we want to see the direction. Is it going down or going up? So let me put this in context how it works. So a bond, here's how a bond works in general. So the more you pay for a bond, so this is what we're reflecting the price of the bond. So if the price goes up, the yields come down, okay? And as the price goes down, yields go up. Let me make this as simple as I can for you for the newbies out there. I got a bond. Say it's a mortgage-backed securities bond. And in a year, its maturity price is $100, okay? So in a year, whenever I turn in my coupon, I'm gonna get $100 back. Well, today I pay $50 for it. Well, let's say it's a high price. So let's move that up as the prices are moving up. So I pay $100 for that bond, all right? So I give you $100 today. A year from now, I hand in the bond and you give me $100 back. What was my yield? 0. So I give you 100 and you give me 100 back. That wasn't a good deal. So my rate of return was 0. Okay, so let's bring that price down. I'm a frugal investor and I bring the price down. So let's say now I pay you $50. Okay, I give you $50 today and I take that coupon a year from now and give it to you and you give me $100 back. What's my yield now? 100%. Okay, so as the price goes down, the yields go up. So we hate when this number is basically red or the charts are going down. Well, we just went from up 13 to down 13, like that. All right. So the markets are moving and they're skittish. They don't know what's going on because Federal Chairman Powell told them all this time that they weren't only going to do a 50 basis point move in rates, but they're going to do, now it seems like, a 75% move. So what's that doing for mortgage rates? Well, let's go. This is where mortgage rates ended yesterday. And you can see all the effect of yesterday's moves still hasn't been priced into the market because this rate should be closer much closer to 6.5 than we are at 6.18. So what we're seeing is yesterday we had a complete crash in the market. So far today, we have the MBSs that are, let me refresh this because this is all over the market. Let's go in. Now it's down 11. So now we're down 11 more. So that means rates are going to, as we just learned, are going to go a little bit higher. So I would expect these rates by today, midday, to be at least 6.25, at least 0.25% added to all these rates. Okay, so these are mortgage rates published by Mortgage News Daily on a daily basis. These are not any individual bank's lenders. This is not a client's rate. This is basically just a trend that you can watch. Basically, what I like to say is use this number right here, the number, the change, like you would do the Dow Jones. You probably don't even know what the Dow Jones is right now, the number, but you know the movements that it takes. So let's say, for example, the Dow Jones is down, like yesterday, 1,000 points. Well, most likely your stock is down, okay? So in this case, what we see right here is as this number goes, the adjustments go up, well, if you haven't locked in, your rate's probably going to move in tandem with this. So let's go over briefly just to explain these things. So we have here the 30-year fixed coming in at 6.11 or 6.18, up 33 basis points. That's what we call this, 0.33. And then you can see the rates all across the board. Okay, these are where rates are. So basically I want you to just pay attention to the adjustments here. This is how much mortgage rates changed yesterday alone. Okay, so that is my mortgage minute for today. We will be back. I will be back today at 1 o'clock live to answer any and all the questions that you had. Why I'm doing it, I'm going to start doing it more frequently. Yesterday we had over 250 viewers watching as I was answering questions, and I apologize I couldn't get to them all. So if I didn't get to your question, please feel free to email me or jump online today at 1 o'clock. We'll be live again, 1 o'clock Central Standard Time. Hope to see you then. Take care.